Hello, and thank you for joining us at xm.com. This is the Daily Market Comment by Raf Boyajian. I'm Cristina Marujos. After some very mixed readings on the U.S. economy this week, the latest non-farm payrolls report will take center stage today, with investors hoping for some signs of a cool down in the red-hot labor market. The majority of analysts see the fewest jobs since December 2020 being created in September, but the consensus figure of 250,000 may still be too hot for the Federal Reserve. Fed policymakers have been out in droves this week, all reiterating the same message that rate hikes will keep coming until the job is done. The market-implied terminal rate has crept up to just under 4.6%, while the odds for a 75 basis points hike in November have increased to almost 90%. Treasury yields have also been subsequently recovering from their lows at the start of the week. The Fed's latest pushback against market ramblings of a slowing down in the pace of tightening weighed on equity markets. But whilst the October rebound has been thwarted, neither is there any panic selling. The S&P 500 closed down about 1% on Thursday, and the Nasdaq Composite fell even less by 0.7%. But tech stocks look set to underperform today after chip makers Samsung Electronics and AMD issued profit warnings due to falling demand. E-mini futures were only slightly in the red during the European Open, so a bounce back cannot be ruled out from a weak jobs report. Meanwhile, in currency markets, the US dollar eased from its overnight highs, but its index against the basket of currencies was still trading close to a one-week peak. The dollar briefly climbed above the 145 yen level late on Thursday and has now started to reverse lower, raising suspicions about yen intervention. Sterling is attempting to regain the $112 handle after getting knocked by a downgrade by credit agencies to the UK's credit outlook, as well as from a not-so-reassuring debut party conference speech by Prime Minister Liz Truss. The euro was unable to find much support yesterday from the minutes of the European Central Bank's September meeting, but was steadier on Friday around the $0.98 mark. The Canadian dollar was another currency that could not benefit from more hawkish language and weakened past 137 to the US dollar. Thank you for watching the Daily Market Comment at xm.com. Have a great weekend.